Welcome to Markets Now. I'm Michelle Rook along with Brad Koima of Koima Varlick. A quietly higher day in the grains with livestock futures. Well, we were kind of leaning lower in the cattle, mixed in the hogs. And Brad, let's start off talking a little bit about the cattle market. Down here today, looks like we're kind of in consolidation mode, even though we did have some higher cash trade this last week. So what gives?
Well, I guess you got a very fair question. When the news seems to be pretty good, right? But you got to remember that the market, I guess, still is in a market of action and reaction. Even when the news is really, really bad, we don't go down every day, thankfully. And even when it seems to me, at least, like the news is pretty supportive here. Like you said, cash market finished really well in the north last week. And even the south was a little better at 180 and didn't trade a lot of cattle. I think there's a little more bounce in their step with some of those feedlots down there, thinking that maybe with the basis the way it is and with these numbers getting a little tighter down there in Texas, that they should try to get a little more for their cattle. But yeah, we've had a couple of down days here. I think it's a correction. I think tomorrow, a third day down, I'd like to see how the market handles that. I think trading at a discount and still in a very much in an uptrending market with charts certainly intact. I guess I'd like to think this thing's still okay.
So last week, you and I talked about support in live cattle futures, which held. Where are you watching on the charts that we need to kind of hold at this point?
Well, I think
so that the funds don't get out of a bunch of their longs. So
correct. If you're trading October, which is where the volume is and where the funds are, to me, the first support was today's lows, and that's kind of minor support. I think if you get someplace south of 179, even, you're probably going to see some funds come out of it. I'm talking about 178.80. There's a moving average there, and there's also a retracement there halfway back. So that's kind of the level I'd watch. I'd be disappointed, surprised, both, if we would take that out. To me, I think the funds would protect it, and the fundamentalist side of the market would probably be supportive too.
You bet. Okay, so we talked about the cash trade last week being higher. In fact, the second highest weighted average in history. What are you thinking about this week? Can we build on it?
I was thinking higher. Now, Tuesday, there's not much to go on here. Your old stomping grounds here has a big sale, of course, in Yankton. And it was 3 to 4 or 5 higher, I'd say, on the kind anyway. Conventional cattle bringing 190, 150. Otherwise, up here, we're kind of asking 190, which would be the best any of us have gotten so far. And show lists are just uncharacteristically small. I don't remember, and I'm an old guy, having show lists this small in August. I mean, this is the traditional farmer fed, calf fed deal where we've got thousands of them. Okay. And we are still very current. And I would argue with anyone that we're as current as we've ever been. And I think more so even than we were in 2014 at this time. So I still feel that gives the feedlot some leverage. Got a packer that's serious about kill cuts, but so far he hasn't been able to take any money off the cash.
Yeah. Talk about the kill cuts there, because obviously the packers are trying to do that to prop up their margins. But 613,000 head, is that also a function of just the fact that we are that tight? Cattle just aren't there.
Well, we have a funny saying here that I like to quote. I was there when we ran out. That was a reference to my good friend Charlie McBain used to say that. I was there in 1973 when we ran out of beans. Anyway, the certainly a part of it is less cattle. Without a doubt. Now, if the packer was flying along making $400, $500 a head or something like that, he probably would reach even further into these short-fed cattle, non-grading kind of cattle, which they got a lot of in Texas, by the way, even lower than last week. But like, for instance, there was a major plant in Amarillo yesterday that was down for the day. Here and there, you've seen the lack of Saturday kills. You've seen these Friday kills slow down. There's no question that there's a lot of them are taking an hour or two here or there, or taking a whole day for maybe it was a planned one, maybe not, a time down. So yeah, they're trying to push some cattle back. They're trying to get a little leverage back, and they're trying to do something to probably get their the beef market propped up. So they're in a kind of a catch-22 though, in my opinion. I think coming out of that COVID deal where you couldn't get anybody to work in a beef packing plant, I think they're very, very reticent to, get aggressive about, okay, we're going to go to 32 hours like they did for months during 2014, because I think they'll be a little afraid of getting their labor force back. So they're in a little bit of a tough spot right now, but everyone gets their turn.
We should also mention those your cattle are getting picked up early, aren't they?
Thank you for asking about that. Yes, and it's not just in one pack and play with one name on it. It's several. But I can, I've been told many. I've had personal experience of cattle sold last week that, yeah, it'll probably takes a couple of weeks to get them picked up, and then they're going to go tomorrow instead. Okay, it looks to me like the pack are still closer than the knife than he'd like to admit, and that should help give the leverage here to the feed yard side.
Hogs mixed here today, but that market has corrected off of its highs. Is that market seasonally put its top in here?
I'm going to guess, as poorly as I've been guessing on hogs.
We all have.
Yeah, it's okay. I didn't understand, I guess. I thought Prop 12 was going to be bearish when we got on the backside of it. And I think maybe more of the public did, and maybe that was part of the trap. You got a fund community that's long up to their eyeballs.
Oh my gosh, yeah.
You got a chart that's starting to try to roll over. August was a little weird today. I thought maybe when we gapped lower here a few days ago, I thought, okay, that's it. Now we crawled back and got on top of that gap today. October looks maybe a little heavier on a chart, but October is a big discount. Wow. I don't know, the fundamental, I guess part of me keeps looking at, good grief, look at what you can buy these isobeam pigs for. Clearly, it seems like anyway, there's too many of them, right? And that's why they're so cheap. And it looks like you're going into bigger supply. The market is a big discount. But yeah, if I had to put my vote in here, if I was a hedger, I'd be paying big attention to it. Yeah.
So grains have had a sharp sell-off. We've taken out a lot of weather premium. We're going into the WASDE report. Technically, we've kind of held where we needed to, at least on the beans here. Now, where do we go?
I think, like you said, that would make sense to me. We held right at 50% retracement here on the break overnight on the November beans. Obviously, the market reacted to what was a monster rain across the Corn Belt.
Yep.
Plenty right here. In fact, areas of 10, 11, 12 inches of rain, believe it or not, in this community that I'm sitting in right now. But putting a big yield potential, particularly in the beans, and maybe stop the bleeding a little bit on the corn. I think that now looking ahead into the report on Friday, after this steep a break, and it's a big break now, $1.40.50 almost on the beans, and the corn, approaching the lows of the move. At some point here, I think maybe we try to build a little bit of demand back into the corn market. And I know I've been the first one to say here for weeks and weeks how bad the demand is on corn, but the cure for that would be get to lower prices. And I think the user here, if he can buy corn under $5 after paying over $7 all year last year, he might be a little more attentive too. So I think the market tries to crawl back a little. I'm not particularly friendly, but we ought to be able to bounce a little bit from these technical support areas.
Okay, sounds good. Thanks for joining us, Brad Koima with Koima Varlick. That's Markets Now.